Hello, my name is Blake Snaringer, and today I will be presenting my final project for the part 2 of the final for FIN643, the Quant Finance class. And for the first question, it is, what is your viewpoint on various asset classes based on these articles? The two articles that were read were both based on the yen carry trade. One of them was a previous article essentially just going over the main point of the yen carry trade, which we also did have an assignment on in class, building a quant model to be able to borrow yen and invest in US equities, which the yen carry trade does go beyond equities, as I'll soon discuss, but that is typically the most common way that the yen carry trade is used, by taking advantage of the lower rates in countries like Japan or China, and then investing in higher returning assets or bonds in countries like the United States. Based on these two articles, and the more recent one that was published on December 3rd, which actually on that day, if you were watching like the Triple Q or the Dow or the S&P, almost all indexes were down a fair amount due to a sudden, rise in Japanese bond yields, which caused a lot of the trade to unwind. Because whenever, the bond yields go up or the value of the yen goes up, it essentially causes margin calls, because now all of a sudden it changes the calculus of how people are borrowing, and now the amount of reserves that they have to put down increase given the new gap closing between the value of the dollar and the value of the yen, or the interest rate of the dollar and the interest rate of the yen. But based on these two articles, I personally do believe that this carry trade will continue to unwind in the near future as Japan continues to suffer from higher inflation, like similar to us, like around like 3%, but it's very atypical for Japan. Like they haven't had, consistently over 3% inflation since I believe it was like the early 1990s. And now all of a sudden the interest rate and the Japanese yen is the highest it's been since 1999, and that was the same year that I was born. I'm 26 now, so it's crazy that we're making a big U-turn. And not only that, but they consistently had deflation for pretty much the whole time that I've been alive, and now we kind of have a big reverse ever since COVID, and they just haven't been able to conquer that like a lot of nations. But for there, it appears to be stickier relative to the amount of deflation and the amount of economic horsepower that they had going into COVID. Not to mention, they didn't even print proportionally nearly as much as the United States or many other countries. Based on this trade unwinding that I'm predicting, what will go up in value if this trade unwind continues, which I think it almost certainly will be the Japanese yen, US treasuries. The yields will go down, but the prices will go up. And then other safe haven government bonds like German bonds, UK gilts, Swiss bonds. Gold will most likely go up, and volatility like the VIX or the VX futures will most likely go up. What will go down as this trade unwinds will be global equities, especially high flying tech stocks, any kind of high return, because a lot of them rely on this cheap capital to be able to pump up the prices, to achieve the high PE ratios that they currently are achieving in the market. In addition to corporate credit, because a lot of people like to take advantage of the difference in how much they're paying to borrow the yen for how much more there'll be a good spread between yen bonds and USD bonds, but there'll be even a bigger spread between corporate bonds or mortgage-backed securities, or these higher interest yielding than the US bond in the United States that people most likely have to pull the money out of in order to unwind this trade as interest rates and the currency goes up for the yen. And then also, risk on currencies will most likely decline for very similar reasons. Commodities, most will almost certainly fall as people will have less money to speculate in currency markets. This is a natural part of just liquidity going away. In addition to real estate, because like I said, there'll be less money for mortgage-backed securities, in addition to just less speculation to be able to build more houses and to be able to cause more money to flow into that sector, especially REITs that rely heavily on this money coming into them. In addition to crypto, because as volatility goes up, as assets go down, crypto is probably one of the most risk-on assets. So as people try to de-risk, even if there isn't a lot of leverage in crypto, which a lot of people predict that there is a lot of leverage in crypto. This will almost certainly cause crypto to decline regardless of the leverage, but even more because there probably is a fair amount of leverage. But I mean, if you want to talk about the broader views, I actually don't believe the yen carry trade unwinding is the biggest issue in the United States economy right now, or the global economy. I think that this could cause a shock, and like we saw on December 3rd, like a one-day shock, but this, in addition to other problematic things, could cause huge problems in the United States. Like some things that I personally think that are going to get much worse over the, what could cause the United States economy to get worse over the next couple years would be like the amount of outstanding debt that consumers have and the amount of delinquencies that they have, in addition to a lesser extent, the amount of government debt that we have and just the unsustainable nature of how much government debt we continue to take on. And that's getting compounded right now by how high our rates are, just making the payments that we have to make on this debt exponentially high. But I think the bigger issue is consumer debt, because consumer debt is just wild. Like you look at auto loans or auto loan delinquencies are through the roof. We're hitting levels we haven't hit in 30 years. Because people can't pay these super high interest, because now the average car loan is at 14%. The average car payments over $1,000 a month. People aren't being able to make that. And another real reason for that, which leads on to my next bigger point on why I think there's bigger issues in the economy than the Japanese yen carry trade unwinding, is the rapid decline of the job market. You saw the ADP report 2 days ago. Vastly negative. The government hasn't been reporting the data for the last 3 months due to the shutdown, and it most likely was, based on Dow Jones estimates, pretty negative. And I just personally think this trend is almost certain to continue as the future progresses. And this, because the consumer debt is still at some level maintainable, not just auto, but consumer debt goes before, beyond auto debt. It also goes into credit cards, personal loans, mortgages. There's just so much consumer debt. But we're gonna have such a credit crisis with consumer debt if all of a sudden we have these, people taking out all these high interest debt and they don't have a job to pay it. Right now it's a tough, tight job market to be able to get in a job. But what's gonna make it even more scary for everyone is if all of a sudden the total unemployment rate goes vastly up, labor participation rate goes down dramatically, and now we have all this debt, no one can pay them, everyone's defaulting. That would be a mass catastrophe for the whole economy. And I think the last biggest issue that I think we have affecting the economy is, it seems like, based on a lot of company earnings reports from my perspective, and from other analysts that are much more knowledgeable than me, that there's just so much of the economy being propped up on the very top end income and wealth consumers, and these consumers will continue to consume as long as they have money. They perceive their money will continue growing. But if we get a huge shock in the job, in the stock market, for instance, unemployment starts going up, it won't necessarily impact people right near the top end right away. I mean, there might be some high flying tech job, but the more wealthy than just the mid six-figure earner people, they won't necessarily be impacted by that. But what will impact their spending is if there is a huge stock market decline. And that's why I feel like the yen carry trade could cause a ripple shock effect, is if you have a pullback in the job market, credit defaults, and then you also, in addition to that, have a yen carry trade unwind as they continue to hike rates, which is almost inevitable. The yen appreciates over the dollar, and then now we're in a kind of situation where financial institutions are getting margin called, and that will almost certainly cause the stock market to decline rapidly. And wealthy and higher income consumers have most of their wealth tied up into the stock market. So a decline in the stock market is really the only thing, the stock market as a whole is the only thing keeping these consumers consuming. So if the stock market rapidly declines, you'll see essentially all sectors of income and wealth no longer spending, having spending declines year over year, and then that's, you know, almost certainly to cause a large-scale recession, you know, much greater than we've seen in recent times. Yeah, so based on that, if we're just talking about what I would do for question 2, what trading strategy would you suggest based on your viewpoint? So if we're just talking about the yen carry trade unwind, I think the best things to be investing in would be something like a volatility index as we get closer to the yen carry trade unwind, because this will almost certainly cause a big spike in volatility. Like we saw that on December 3rd when we had that smaller unwind, but if we have any continued days, or we have like just a trajectory of unwinding in addition to other economic shocks like I just talked about happening at the same time, that'll be a great asset to invest in. Obviously don't invest in the VIX long term, but you know, even that could be a viable investment for multiple months. In addition to gold as a safe haven, like, you know, lots of people, as volatility goes up, stocks go down, other assets like REITs, like, you know, all the 6 that I named earlier continue to go down. You know, people want a flight to safety. A good flight to safety will be gold. Also, you know, US government bonds. And another good like trading strategy that I would personally implement, which is probably the best one based, you know, just strictly on the yen carry trade, that would have a lot of safety regardless on macroeconomic conditions in the global economy, would be to take a leverage bet on the yen over the US dollar, because I think it's almost certain that if we get, you know, a yen carry trade unwind, which I think is inevitable, that we will get the yen rapidly appreciating over what the US dollar currently is, and regardless on economic conditions, that almost certainly will happen, because it seems like inflation there is more sticky than here, given that they had so much deflation beforehand. They printed virtually none, and yet they still have all this inflation. So I think even if there was a global, you know, recession or shock, you would see inflation rates go down elsewhere a lot more than Japan, which would cause the yen to continue appreciating, as they need to either continue to hike rates or more realistically keep rates the same while the rest of, you know, global governments are rapidly cutting rates. And that would definitely cause, you know, this trade to be a winning trade. And with currency markets, it's very easy to take on a lot of leverage. Thank you for listening to my final presentation. I hope you enjoyed everything I had to say about the 2 questions, the yen, and how it ties into the broader economy. And I hope you like the trading strategies I suggested based on what I see. Thank you.